My name is Thomas Shum, your crypto buddy Tom. Today, in this video, I'm going to talk about how will the next global economic collapse going to affect your money. Before I go over the agenda of what I'm going to talk about, let's go over some house rules, the disclaimer. The information contained herein is for informational purposes only. Nothing herein shall be construed to be financial, legal, or tax advice. The content of this video is solely the opinions of the speaker, who is not a licensed financial advisor or registered investment advisor. In limited circumstances, the speaker has been compensated by many third parties. Purchasing crypto assets poses considerable risk of loss. The speaker does not guarantee any particular outcome. Past performance does not indicate future results. This is not an offer to sell securities. This is the agenda for today. Please take a read for yourself. Number one, how will the next global economic collapse going to affect your money? Economic experts have predicted the next global financial collapse will arrive by 2019. Let's check this video out that says exactly that.
Talk about what should be. You figure out what is going to be, and then you do that. So what is going to be with respect to the stock market? What's going to happen?
I learned very early in my investing careers, I better not invest in what I want. I better invest in what's happening in the world. Otherwise, I'll be broke, dead broke. Well, what's going to happen is this is going to continue. Some stocks in America are turning into a bubble. The bubble's going to come, then it's going to collapse. You should be very worried. But Henry, this is good for you because somebody has to report. So you have job security. You're a lucky soul.
Well, yeah, TV ratings do seem to go up during crashes, but then they completely disappear when everyone is obliterated. So nobody is hoping for that. But so when is this going to happen?
Later this year or next.
Later this year or next.
Write it down.
And what will trigger it?
Well, it's interesting because these things always start where we're not looking. In 2007, Iceland went broke. And people said, Iceland, is that a country? They have a market. And then Ireland went broke. And then Bear Stearns went broke. And then, Lehman Brothers went broke. They spiral like that. Always happens where we're not looking. I don't know, it could be an American pension plan that goes broke, and many of them are broke, as you know. It could be some country we're not watching. It could be all sorts of things. It could be war, unlikely to be war, but it's going to be something. When you're watching Business Insider and you see, that's so interesting, I didn't know that company could go broke. It goes broke. Send me an email, okay, and then I'll start watching.
And how big a crash could we be looking at?
It'll be the worst in your lifetime.
I've had some pretty big ones in my lifetime. It's long.
It'll be the biggest in my lifetime, and I'm older than you. No, it's going to be serious stuff. It's going to be big. We've had financial problems in America. Let's use America. Every 4 to 7 years since the beginning of the Republic. Well, it's been over 8 since the last one. This is the longest, or the second longest in recorded history. So it's coming. And the next time it comes, in 2008, we had a problem because of debt. Henry, the debt now, that debt was nothing compared to what's happening now. In 2008, the Chinese had a lot of money saved for a rainy day. It started raining, they started spending the money. Now even the Chinese have debt, and the debt is so much higher. The Federal Reserve, the central bank in America, balance sheet is up over 5 times since 2008. It's going to be the worst in my lifetime too. Be worried.
I am worried.
Go ahead.
Can the Fed rescue us? Can anybody rescue us?
They will try. They will. What's going to happen is they're going to raise interest rates some more. Then when things start going really bad, people are going to call and say, you must save me. It's Western civilization is going to collapse. And the Fed, who's made up of bureaucrats and politicians, will say, well, we better do something. So they will try, but it won't work. They will cause some rallies, but it won't work this time.
And we are in a situation where Western civilization already seems to be possibly collapsing, even with the market going up all the time. Often when you do have a financial calamity, you get huge turmoil in the political system. What happens politically if that happens?
Well, that's why I moved to Asia. My children speak Mandarin because of what's coming. You're going to see governments fail. You're going to see countries fail this time around. Iceland failed last time. Other countries failed. You're going to see more of that. You're going to see parties disappear. You're going to see institutions that have been around for a long time. Lehman Brothers has been around over 150 years. Gone. Not even a memory for most people. You're going to see a lot more of that next time around, whether it's museums or hospitals or universities or financial firms.
Well, according to Jim Rogers, many governments and countries will fail in this coming worst economic collapse of our lifetime. There's another video that shows us the after effects of the collapse, which is this one by Mike Maloney from wealthcycles.com.
Had a few times, and it came up again just lately, is, with all of the turmoil that I see in the future, do I see any countries that will prosper or be rewarded with, in the scenarios that I'm talking about? And, I really don't know which ones are going to be the big winners in this. There's a global event like this where it's releasing decades of stored up energy where we've borrowed prosperity out of the future to spend it today. This, the whole boom that we've had is credit based. And when something like that collapses, you still have that debt laying out there in the future that has to be repaid. So typically it's not a good thing where there's a lot of winners. Gold and silver should be the biggest winners. But when it comes to countries, countries that have the most credit-based monetary systems are going to suffer the most. The ones where the big monetary aggregates, where everything is borrowed into existence. The countries that have, well, all currency is borrowed into existence, but the countries where most of the currency supply is base money circulating as paper bills in the public, that's going to suffer a whole lot less than the countries like the United States, where everything is rigged up on credit, that's leveraged by credit, that's leveraged by credit. There's going to be a cascading event of derivatives and of loans going bad and so on in the countries that are highly leveraged and where everything is sort of smoke and mirrors currency that's whipped up from nothing, and then you use that currency that's based on nothing to whip up more currency from nothing. But it's all owed back. And so the countries that are going to do the best out of this are probably the countries that are the poorest right now. Third world countries and all of the first world countries are going to see the giant convulsions. However, Robert Kiyosaki used to say that real investors rush toward crisis, not away from it. And the place that where investments will be on sale most is going to be in the countries with the most damage to their economic systems and their financial systems and their asset structure. The real estate will be on sale, businesses will be on sale. And so true investments, really hard assets other than gold and silver, those will be in a bubble at the time, I believe, and then that's the time to get rid of them. And then Elliot in Canada asks about my thoughts on.
As Mike Maloney says, global events like these, countries with the most credit-based monetary system are going to suffer. In the last global economic collapse 10 years ago, in 2008, Cyprus, Greece, and Zimbabwe got hit. Even before this coming next global economic collapse, Venezuela, Argentina, and India already got hit. Do you think you would be exempted from all this credit crunch when your country borrows plenty of money from the IMF and World Bank? As an example, just recently, Malaysia inherited an enormous debt of 1 trillion ringgit from the previous government. Now, how about other countries in Asia Pacific region? Would you think that it will also affect you? Giving it a good thought, you would realize that the devaluation of your money will be imminent with the interest rate rising and hyperinflation set in the after effects of the global economic collapse. So why keep your money in the bank, stocks, real estates, and bonds when everything is falling all around you and the whole money market are slowly but surely becoming more digitized or tokenized through the blockchain? Do you know that in an event like this, your government can pass a law to get your money from the bank to help the country get back on its own feet? Instead of ending up like this, why don't we prepare ourselves ahead of time by converting our money into the blockchain money, where it is immutable, disputed, where governments cannot alter or delete? Number 2, a new emerging crypto asset class. Today, there is a new emerging asset class in the capital markets that we can take advantage of in preparation for this imminent global economic collapse, namely the new emerging crypto asset class. According to Chris Buniske and Jack Tata, the authors of a new book, Crypto Assets, The Innovative Investor's Guide to Bitcoin and Beyond, they define crypto assets as, quote, "We believe that the clearer view of this brave new world of blockchain architectures includes cryptocurrencies, crypto commodities, and crypto tokens, just as we have had currencies. Be it currencies, commodities, or service, blockchain architecture helps provision these digital resources in a distributed and market-based manner," unquote. They went on to say, quote, "A currency fulfills 3 well-defined purposes. Number 1, to serve as a means of exchange. Number 2, a store of value. And number 3, a unit of account. Where compute power, storage capacity, and network bandwidth are digital commodities. When provisioned via a blockchain network or ecosystem like Ethereum, they create finished products, digital goods, and services which are orchestrated by crypto tokens," unquote. Number 3, buying your first crypto asset. It's pretty hard to understand how crypto assets work if you don't own any. Fortunately, you don't have to buy a whole Bitcoin, a whole Ether, or a whole Litecoin. You can buy tiny fractions thereof. It can be divided into 8 decimal points, example, 0.000 with 7 0 at the back plus 1 1, which is 1 Satoshi. You can buy them and hold them for it to go up in price and sell them to make a profit. If the market is down, you will have to hold them until the market goes back up again before selling them. You have to have the holding power, as they say. Next, I'm going to share with you my own experience in the crypto asset market, how I learned from my own mistakes, And now I can teach others to avoid making the same mistakes that I did. Which brings me to number 4, my journey with the crypto assets world. My journey with crypto assets started in 2014 when the Bitcoin price was at around $400, dropping from its all-time high of around $1,200 in November 2013. At the time, I knew nothing about the market except that I just heard the word Bitcoin being introduced in the media. So I just hungrily devoured all the news about it and learned all I can without doing anything until the mid of 2016, when I started looking at investing through a company that provide daily ROI based on the amount I invested on Bitcoin. I made good in this investment, which led me to buy other crypto assets by using the gains I made from this investment. That's how I started building my portfolio with this new emerging asset class. Then comes the ICO craze in 2017, as the crypto asset market has penetrated deeper into the general investing public. At that time, there were many new startups that started with new ideas of how the blockchain can be used more widely in the fabric of society for its utility. So new ICO launches were literally coming out by the hundreds on a monthly basis. Naturally, I got involved buying into the ideas of what the startups can do, not on what they had already done with ready products. At that time, not knowing better because all the buzz that's going on. I bought into one such ICO, 60,000 coins for $10,000, which got me stuck until today, where the company is not even listed on coinmarketcap.com after more than a year. In late 2017, the price of Bitcoin rose to an all-time high of around 20,000 on December 18, before plunging down to $7,000, and it went up and down between the lows of 5,000 to a high of 10,000. It has been going on a sideway ever since, on the verge of a possible Bitcoin bull run very soon. This led me, after this ICO debacle, to conclude that I will not buy any more ICOs, which is my new strategies. Number 6, big banks are moving into the crypto asset market. Let's take a look at this article by Cryptocurrency News, CCN. Big banks are investing heavily in blockchain and crypto. An article on May 12th of this year. We'll just jump right onto it. Here it says big banks are in crypto. Major banks such as JP Morgan, Goldman Sachs, and Bank of America cooperate with large-scale conglomerates and enterprises to provide banking services, loans, and business solutions. Other than that, enterprises also work with third-party service providers and spend millions of dollars on a quarterly basis for audits, reconciliation, and manual labor costs to sustain their supply chains and minor operation. Chia Veron stated that many major banks have started to invest heavily in the blockchain and cryptocurrency sector to facilitate the growing demand from banks for cryptocurrencies and blockchain technology. Initially, Bitcoin was the only way to access blockchain technology. Recently, Chevron stated that banks have started to explore a wide range of blockchain networks and technologies. Now, this brings me to my item number 6. My prediction is that we will see a Bitcoin bull run in quarter 4 of 2018. Now, let's just take a look at the Bitcoin historical chart at coinmarketcap.com for a moment. Year by year, from 2013 to 2018, for 5 years, will we see a Bitcoin bull run in quarter 4 of 2018? Now, in 2013, as you can see, starting from October 1st, the price at September 30th, just one day before October 1st, the price of Bitcoin is 137.15 cents. And entering into October 1st, which is quarter 4 of 2013, it started rallying strongly on an upward movement right up to the highest price here on December 5th of 2013. The price went up to 1,146.10 cents. This is the first year in 2013, the Bitcoin bull run. Only with the exception of 2014 that we can see there's a downturn in Bitcoin's price going down. But come 2015, there's another Bitcoin bull run starting from October 1st. The price of Bitcoin is 237.48 cents. And it runs from here upwards to a high price on November 5th at 404.44, making a way in just 2.5 months, doubling the money of our investment. Then comes 2016. We yet have another bull run, but this time is on a very slow rise, starting from October 1st, right up to the highest price in this year, quarter 4 of 2016, the price was at 1,155.06 cents. And last but not least, in quarter 4 of 2017, we yet see another bull run when we enter into quarter 4 of 2017. From a price of 4,341.05 cents, it went right up to a high price of almost 19,500, making a total of 4.5x or 450% gain in just 2 months. between this time and here in just 2 months. So from this historical chart that we see from 2013, except for 2014, there's a downturn. 2015 is a bull run. 2016, a bull run. And again, 2017, which is also a bull run. Therefore, I can safely say that my prediction for this Bitcoin for this coming quarter, which is quarter 4 of 2018, I can safely say that on a positive note, that this quarter 4 of 2018, we will likely or possibly be seeing a Bitcoin bull run yet again at this time. Well, in these exciting times, the crypto asset market has been growing exponentially, offering new investment opportunity to people from all walks of life. Whether you are millennials, Gen Xers, or baby boomers, we all have an equal opportunity to participate in this ever-expanding and lucrative market. Entering the crypto asset world is also quite simple. You just need a bank account and credit card, and you can acquire your first share of Bitcoin through a very user-friendly exchange. My method are very simple. I'm using fundamentals or sentiment analysis based on media monitoring, where I'm spending more than 10 hours daily in monitoring the crypto assets, crypto commodities, and crypto token. However, buying crypto asset remains a major hurdle for some of you as to what to buy, where to buy them, and what kind of wallet to use, and how to secure your crypto asset for security purposes, which are some of the questions that you will ask if you are new. Therefore, I have decided to come out with this introductory video to educate people who are interested to go into this new market. You can make a monthly contribution by donating to my video channel to keep more future videos coming. And I will conduct a weekly webinar to teach you how to go about it. Of course, there are some of you who are already in the crypto asset market for quite a while, and you already know your way around. But you lack the time to spend on researching the market for undervalued assets. For you take advantage of it. All you have to do is contribute by donating to my video channel when you have made profit from them later. Well, that's it. This is all I have to say in my first introductory crypto asset video for now. If you like what I'm doing here, please hit the like button and subscribe to my video channel and click on the bell icon so that you get notified when I release new videos. Thank you. This is Crypto Buddy Tom signing off. Bye.